One of our favourite quotes that we try and incorporate into the majority of presentations that we give is from Warren Buffett, who's arguably the world's most successful investor. And it's a quote from over 40 years ago. And Warren says, to invest successfully over a lifetime does not require a stratospheric IQ, unusual business insight, or inside information. What is needed is a sound framework for making decisions and the ability to keep emotions from corroding those decisions. And when you break that down into its constituent parts, we start off with the first line, to invest successfully over a lifetime. And that's exactly what we're trying to achieve for our clients. Not to outperform a particular index, because no client in their right mind has ever come into me and said, my goal in life is to beat the MSCI World Index, for example. It's to make sure that no matter what happens in their lives, no matter what happens in the investment world, in the economic world, that we can say that they've been successful with their investments throughout their entire lifetime. He goes on to say that it doesn't require a stratospheric IQ, unusual business insight, or inside information. The way I interpret that is that what he's saying is that investments are fundamentally simple and based upon some common sense ideas. And so it's our goal with our investment process is to stick to those common sense principles, to keep it as simple as we possibly can to deliver the returns that you, our clients, need. He then says that what is needed is a sound framework for making investment decisions. And that's everything that our investment process brings to the table. It's bringing a logical process, a logical series of steps that we go through to ensure that success long term. And then finally is the real key, because he finishes off by saying that what you need to do is to ensure that emotions don't corrode that framework. And of course, when it comes to investing money, then we all have the emotions of fear and greed. And unfortunately, we use them quite often at the wrong time. When markets are low, naturally we're all fearful. When markets are high, naturally we all tend to be more greedy. And yet we know that what we should be doing is buying at relative lows, and we know that what we should be doing is selling at highs. And yet when markets are low, people are more fearful. And it's our job to provide that confidence so that people are buying in at low points. And then to tame down some of that enthusiasm, to tame down some of that overconfidence when markets get high, so that we avoid the dips that come afterwards. So successful lifetime investing is what we're about. We've looked after clients now from the day that we've set up the business that are still clients today, and we'd love to look after you throughout your lifetime as well going forwards.